and happy Tuesday. I'm Michelle London, broker with RCFE Resource. We thank you for attending today's Ask the Broker webinar. Today we'll be discussing the importance of maintaining accurate and timely financial statements. If you have questions, we would ask that you indulge us and wait until the end, where either you can put it in the Q&A or raise your hand and we will unmute you. Alternatively, if you wish to speak with me after the broadcast, if you have a private question, please feel free to contact me. My contact information will be in the chat box, as well as a link for next month's Ask the Broker webinar, where we'll be discussing the ins and outs of insurance for your care home. Today's topic is very important and very timely, as we've just passed the tax filing deadline. So today, without further ado, let me share my screen. We will be discussing the importance of maintaining accurate financial statements. Today, we'll be talking about the profit and loss, or P&L statement. Now, there are other financial statements, primarily the balance sheet, which records your assets, such as furniture, the house itself, if you own the real estate, and other assets like that, your home goods. And also it records your liabilities, such as accounts payable, your mortgage. So that's what the purpose of the balance sheet is. But today we'll be discussing the profit and loss statement, which records your income and expenses over a period of time, like a month, or perhaps a calendar quarter, semi-annually, or for the year. A balance sheet is just a snapshot at a point in time to see where you stand, whereas an income statement is for a period of time, say a month. And we understand starting a business is very challenging, and God bless all of you out there. Running a care home such as an RCFE or an ARF is a very challenging business. It really is. We realize how hard you work and that you wear so many different hats in the course of your daily activities. We know it's a hard business and very challenging. And to run it successfully is very difficult. You have so many things to consider, but the business aspect, running it like a business and doing periodic, hopefully monthly profit and loss statements will be able to give you a tool, a guide with which you can make informed decisions about your business. For example, let's say you've overindulged during the holidays and you have a general feeling, maybe you've gained some weight, your clothes are a little bit snug. It's just a general feeling, but you want to measure it. So you get on a scale to see exactly, did you gain 2 pounds or did you gain 10? And so often we find with operators and owners of care homes, they have a general feeling how their business is doing. Maybe they feel that they've been very successful that month, or maybe they feel that their money seems to be going and they really have no idea where. That's the purpose of a profit and loss statement. It will provide you with the useful tools you need in order to make the best business decisions. And I know some people think it's a chore to put them together, and it can be. I myself have an accounting background. I'm a CPA, but I realize not everybody who gets into the care business has that accounting background. You're so busy caring for residents, and it's difficult to get into the business aspect of it, where you're actually honing in on the financials, the profit and loss, so you see where you're going. And I know a lot of you don't have an accounting background, so it is more of a challenge. So the profit and loss statement has many names. It's also known as P&Ls. That's probably the most common. It could be your statement of revenues and expenses or income and loss statement. I know licensing calls it a monthly operating statement. And I think perhaps that may be the most accurate title because it really tells you on that monthly basis how you're operating. Are you up? Are you down? And without this useful knowledge to know exactly where you stand at all times, it can be difficult. And believe me, I understand it is a challenge these days with rising expenses. I mean, you're caught with payroll going up and the need sometimes for overtime, costs for food, energy, electricity, all those are going on. So I realize that it's difficult right now when you're faced with so many obstacles, which are drawing on your business. You know, it's very expensive with all the cost of everything now. The consumer goods and rents are going up. Everything is more expensive, and we realize it's a challenge sometimes for that reason. You know, why do a monthly operating statement? Well, it will give you tools to know how you're really operating on either a monthly, a quarterly, or an annual basis. And it allow you to pinpoint the costs that perhaps are not controlled. We've had operators. I knew this one operator. She was the owner of a beautiful 6-bed facility. And I asked her, I said, "You're always full. How do you do that? Is it by word of mouth or referral agencies? How are you getting your residents?" And she goes, "Oh, occasionally I do rely on referral agencies, but it really isn't much." But she realized when she prepared her annual P&L, because she was one, she didn't want to do it on a monthly basis. She would just save all of her receipts and at year end, give them to her accountant to make sense of them. At year end, we realized she had spent 39,000 in referral fees. And that certainly is a huge chunk. And she hadn't realized that she was relying on referral agencies to such a large extent. It kind of crept up on her without her realizing. And it's easy in life to do that. I know, for example, just a real life experience. I used to go to Starbucks and I would spend maybe 350 each time, and I'd go twice a day. I was always wondering why I never had money in my purse until one day I figured out I was spending about $200 a month, which ran into about 2,400 a year. Now, had I realized this earlier, I would have taken corrective action earlier, which I've since done. But that same thing can happen with operating expenses in a business. They just sometimes little expenses creep up and become a very big and significant portion of your overall P&L. Now, why prepare it? Well, if you're going to sell one day, you will definitely need it. But let's say you're hoping to expand and you want to buy more facilities, you'll need it in that case too. If you choose to refinance, that's another case. And actually, it is required by law. The Business and Professions Code says it mandates that you shall prepare monthly operating statements of your business, and also licensing mandates it. So these are a lot of good reasons if you want to expand, if you want to get another loan, if you want to sell. And at this point, let me just say, there are a lot of owners out there we know that have more than one facility. And so often they will just lump the operations together instead of preparing a P&L for each facility. They said they were never going to sell and that they saw no reason to break apart the financials by home. But then their circumstances changed. They had a change in health and they realized they had 4 facilities. They realized they wanted to sell 2. And at that point, it was hard to go back for 3 years and separate out financials by home. So we recommend, really, if you own more than one home, you really should break apart the income by home, because you never know. One day you may want to sell one, and it's very hard to go back and reconstruct the financial statements. So changes in health or family circumstance, you can never predict them. And that's a reason to keep your home separate, because you may want to sell just one, even though you think you never will sell. So the benefits of an operating statement: it offers key insights into growing net income. Now, you can grow income by either increasing your revenues or decreasing your expenses, or a variety of the two. And we feel that having those key insights will help you make the best informed decisions for your business. Just as when you're driving, you look in the rearview mirror just to check what's behind you. This will allow you to look back and see what's happened in the previous month, and will allow you to take corrective action if necessary. I mean, if you're traveling on a road and it's straight and you see up ahead a curve, you take corrective action and you go from straight to making a curve. And the same can be true for care homes. I have here that it increases an RCFE's chances of success, but the same is true with adult residential facility. If you have full and complete information about your business, because you prepare monthly operating statements and you review them, then you can make the best decisions. And this can, they'll pinpoint areas of success, and it can analyze areas of overspending. So it's really a useful tool. Now, licensing has come up with something. I'm sure you've probably seen this before, but it's licensing 401. And when you prepared to obtain a license for your facility, you had to fill out a budgeting tool in order to get an idea of what your budget would be, and you had to submit it to licensing along with your application. Well, this is a monthly operating statement. That's what they put together. And it covers the major areas of income and expense. There's no reason you can't use this as a way to put together your monthly operating statements. Use this as a guide. This has program revenues. It has things for care and services like food costs, personal hygiene items, household supplies. So this takes care of the care and services. Then there's the general administration, which goes into salaries and wages, payroll taxes, any kind of contract labor, but it takes care of the expense of operating the home, like telephone, supplies, advertising, that type of thing, your liability and workers' comp insurance. And it also takes care of the physical plant, which means the premises, the home in which you're operating, any expenses there. It discusses rent and property taxes. If you were to sell, what we would do is add back certain expenses that were discretionary, because we would want to remove the owner's influence on the business, so that somebody who was planning to buy the business would get an idea of really true business operating expenses, instead of discretionary expenses of the owners, such as rent, for example. They may, or mortgage, they might not have the same type of structure that you would. So it is discretionary what they're spending. You may spend more. Interest rates have gone up. So it's important to be able to analyze the financial statements, and when necessary, separate out the owner's influence. Now, the thing is, a monthly operating statement will document all income and expenses, regardless of how large and small, and that will allow you to get an idea of any developing trends. You may notice if you compare last year to this year, perhaps your liability insurance has increased dramatically. And I know a lot of people were surprised when they came to renew for this year that their rates had gone up. That might be indicative to you that maybe you should shop around for different liability insurance. Maybe you can get a better rate. And if you notice, for example, that food costs are going up, well, perhaps you've tried a new service that delivers the food and any household supplies, and that cost is significantly higher, or perhaps it's lower. These are things you want to know so that you can minimize expenses and increase your revenues. We might say, as in that case I was mentioning a few moments ago, where the operator had found that by year end she'd spent $39,000 in referral fees. In a case like that, we might suggest considering alternative approaches to obtaining residents. Perhaps cultivate relationships with skilled nursing facilities or rehabilitation homes, because when the person who's currently in one of these homes needs a lower level of care, if you've cultivated a relationship with the discharge coordinator, it could be, and you have to have a dynamic website with pictures of activities of the home. Really highlight the positives of your home and have a video walkthrough of your home and send this to the discharge coordinator. And the thing is, if they see you have a nice home and it seems to meet the needs of their prospective tenant, their prospective resident in your home, if it seems like a good match from the skilled nursing or the rehab home, well, there's no reason why they shouldn't send them to you. We had one funny story though. Someone was telling me that every single time that a skilled nursing facility would send a resident to them, they would get a call about 10 minutes later, and it would be from a place for moms saying that that resident had contacted them. So now you owe a referral fee. And they said, I can't understand it. It's such a coincidence. It happens every time. And I said, well, probably the discharge coordinator is calling a place for mom and getting a kickback. There's no reason that should happen every single time that they owe a referral fee for somebody that the skilled nursing facility is sending over. So it's crazy. So really, your monthly operating statement will document all income and expenses, regardless of how large or small. And it's true, the more employees you have, if you have more than one home, the more employees you're juggling and the more spending avenues, the more complex it gets to prepare your P&Ls. Now, licensing, as I was showing you before, their Form 401, it is the perfect solution for putting together your income and expenses. It covers most of the major categories, and it's something you can use without much modification. You can put together your monthly P&Ls. You could do it manually by just writing them down in expense categories. That's true. We have operators who are still old school who do that. They write everything down, they keep all their receipts, and then give it to the accountant to make sense of at the end of the month. That can be a lot of work, and perhaps your accountant may not use the same exact expense categories that you would wish to get the information you really want. So that requires a lot of direction for you to tell your accountant exactly how you want them categorized. Now, there are a lot of accounting tools out there to keep your books, such as Excel, QuickBooks, Quicken, and there's many other software solutions. You could try one of those, or perhaps you're already using one of those. I've recently read a poll of owners and operators of care facilities and the different counting software they were using. And I saw a lot of them had negative reviews for QuickBooks because they said it was hard to modify the categories. They didn't have the exact categories and you had to make month-end adjustments. So I've seen a lot of negative publicity for QuickBooks. I myself haven't tried it, but you could investigate. I mean, some of these have short-term trial periods where you can try it out for like a month or something for a reduced cost, but see what feels right to you. It shouldn't be as hard as you think it is. It should just be a matter of entering the expenses in the right categories. And Excel is pretty good at that. So at month end, you just enter the category totals on licensing form 401. And let me show you how you get to that. It's on the California Department of Social Services website, which you can get to by going to www.cdss.ca.gov. And when you do that on your first page, there will be all these categories. We find that the best way to get there is go to find licensed care. It'll be the purple box. So go to that first. The second page that will come up across the top header, the third category over, forms and brochures. You want to go to that because you want to get to licensing form 401. So after you do that, it'll give you forms alphabetic list. That's the category you wish to select. And then they'll give you the categories. You want I through L because you're going to licensing form 401. And then licensing 401 is there, monthly operating statement, and you go to it. You enter your month, you enter your revenues, your care and services expenses, such as food costs, laundry, recreational activities, any personal hygiene items, medical and first aid, and any client transportation. Then you enter the general administrative costs, such as salaries and wages, any kind of payroll taxes that there are, general transportation, then things such as telephone, advertising, insurance. And then you get to the physical plant, which is the premises upon which you're operating. Things such as property taxes. The first category is rent, lease, mortgage payment, and homeowners association fees. That's a good category to have. If you were selling the facility, we would back that out because when you sell a facility, what they want to compare is your earnings before interest, taxes, not property taxes, but things such as income taxes, your federal and state. They want to take out interest, taxes, depreciation, amortization, and rent, because those are discretionary. Different owner, different expenses. There's certain expenses that will be the same, such as, your energy expenses, gas, your insurance may or may not be different. So you'll take out the owner's discretionary expenses if you want to sell the facility, but just for purposes of monthly reporting, put that in there so that we get the best idea of how the home is operating. Okay, you prepared the monthly operating statements. That's the first step. The second step is really to review the information that's contained in them and compare it to previous months. This way, if you go over it with your bookkeeper or accounting professional, you'll have a really good idea of any trends that are developing, such as you may be doing better each month, and you'll be able to measure it by comparing it to the previous month. Let's say your revenues went from, I don't know, 35,000 to 40,000 a month. Well, that's quite a significant gain. And it's good to be able to track any developing trends of your success or any areas that perhaps need correction. Maybe you're overspending. And I realize with today's excessive costs for, oh, energy, food, just everything has gone up. And, payroll, it may be hard to minimize those expenses, to cut back, but at least you'll have the information you need. And in a future webinar, we will discuss areas of possible cost control. I believe that's our November webinar, ways to cut back on expenses. But you could always go to our website if you want to see a schedule or register for any coming events. There is the schedule up there, and you'll be able to see what webinars we will be presenting in future that may be useful information for you. So we have reached the questions section of our webinar. If you would please either put your questions in the Q&A section, or you can raise your hand and we will unmute you. So are there any questions? Would you please put them in the Q&A section, or feel free to raise your hand? Will, do you see any questions?
None so
And
far.
remember that you can always see my personal contact information and register for the next event by going to the chat box. There will be a link to the next webinar, and there'll be my contact information in case you have further questions that you'd like to discuss privately. I'm always open to your calls and to provide a free, no obligation consultation. If you wish, we will provide a valuation of your home and business, and that is no charge and no obligation. So are there any questions, Will?
No.
There are no questions. Okay. So if there are no questions, if you would please indulge us for one moment, we have a brief survey that we're going to put on the screen. We just want to know whether or not you found this seminar useful, this webinar, if it provided any information that you didn't know, or provided some guidance as to some areas you were unsure of. Well, we thank you very much for attending today's webinar. Once again, I'm your host, Michelle London of RCFE Resource. Please feel free to always go to our website to find out information on future events, to register for future webinars, and it's full of jam-packed information about current listings, and we have videos, a number of articles and newsletters that provide interesting topics that are of use to the senior care and adult residential communities. Next month, we will be having an interesting topic, and it's called Not All Insurance is Created Equal. And it's about the ins and outs of insuring your care home and what insurance is really necessary and vital to the operation of your business. You want at all times to protect your nest egg and to guard against any potential liability, because truth is, there are too many lawyers out there, and they will be contacting your caregivers saying perhaps you're not getting the overtime that you're due, perhaps you're working, and this happens especially when you have staff that are living in the facility and doing the nighttime shift. They might say after 10 years, all of a sudden, when they decide to move on, they may hit you with a lawsuit saying, I woke up every single night for an hour and I was never paid for 10 years. And you'll get a letter from a lawyer saying that their client has not been paid for 10 years overtime. Or they might have a lawyer that reaches out and says, oh my gosh, your client is so terribly injured from injuries they received on the job. And then they hit you with a lawsuit for that. So proper insurance is so vitally necessary for the operation of your business. So I thank you very much for attending today. We wish you all the best. In the meantime, if you have questions, always feel free to reach out. And we hope to see you next month. Thank you very much. I'm Michelle London. Be well in the meantime until I see you again.